Recording. Okay. Good morning. September the 14th. We're gonna do continue from yesterday a little bit, looking at some stocks. And this morning, actually, I want to look at some sectors, sector investing, what we can find in sectors. What do the sectors mean? And how do we invest in sectors? And how do we pick out stocks in the sectors as well? So we're gonna go through our little bit of a gonna show you a little bit how to research, especially if you want to go through any particular sector. When we say utility sector, what do we mean, and what do we mean by financial? What do we mean by energy or any other sector? So we're gonna go different things, but quickly, I would some of the stocks that I missed yesterday, BBAI and a couple of other stocks that I missed. Uh, we'll look at it after once I'm done this. So I want to show you a little bit of sector investing this morning, and then after that we go through the stocks. Then I'll go over the algo as well. The new algo, how to scalp it, how to use it, and I'll show you how to set up through the webhook. And yesterday I showed you another platform yesterday that is that hooks up directly to your account rather than you must have a middle software. So this is that I'm still looking at that software. I looked at it a little bit this morning. So I haven't really seen it clearly how we're gonna hook it up yet, how it works. But I am gonna get in touch with those people this week and find out more further about that software. So we'll leave that for this week. Sometimes if I get more data on that, I will share it with you. So looking at what we are going through this morning, we're going to go look through the sector investing. And what is sector investing? Sector investing is basically going through, healthcare stocks. We are going through technology stocks, utility stocks, industrials, energy, real estate. So how do we invest in these kind of stocks? Like my favorite thing to look at these stock sectors are to go into sectors that are not doing well. They have gone down over the last year, that may be ready to pick up again. And you need a reason why. For example, I'll give you utility sector. I'll tell you a reason why I should be, or you should be looking at the utility sector. Okay. First reason looking at the utility sector is it's we are going in the environment where the interest rates are going down. So we pretty sure in the next 6 months, pretty sure the interest rates are going to the downside. Everybody hear me clearly? They got every sharing the screen. If anybody can't hear me, just let me know. Okay. Sorry, I should have done that check earlier. So the sector investing is basically looking at sectors that are cheap, have gone down, they haven't recovered, and why should you buy them now, right? What's a reasoning? And you gotta have a reason for everything, for a stock, utility, whatever you do, you must have a reason. You just can't pick up and go buy something. That's how people usually ended up in losing money. So utility sector is, we know in the next 6 months, even 3 months down the road, we have an environment where we are lowering our interest rates. They're going to the downside. And when these rates usually go down, utilities usually pick up and they usually go to the upside. So one reason right now utilities is sitting at last 3 years roughly about 10%, right? This year so far, if you look at year to date, it's up about 12%. In the last 12 months, it's up about 10%. Okay, so not much compared to if you look at the communication sector, you look at the, you look at the industrials, you look at the financials, even the basic material. So this 9.45% is a pretty low point in the last 3 years. And what is going to make this sector attractive? And why are we going to buy this? One of the reasons is when the interest rates usually go down, these sectors give out dividends. Okay, utilities is like hydro, produces hydro to your homes, Enbridge, anything that the sewer system, anything that is regularly paid, like you pay bills on it, it's pretty much considered as a utility. Okay, so utilities have a whole bunch of different. They have the hydro stocks. They have sewer stocks. They have whole bunch different companies in there, but they all fit the same boat. You can either go buy the ETF itself, or you can go look at the companies that are sitting in there that cheap. And usually want to look at companies that are paying very good dividends, and they usually are in utilities. And why do you want to buy the dividend ones? Because when interest rates are coming down, dividends are more attractive. You want to look at stocks that pay higher dividend what you're getting in interest rate. Okay, that's what you want to look at. You want to look at the stocks that are paying you higher dividend than your interest, and that's why they make utilities become quite attractive. Okay, so if you go into the if you can buy this ETF, which is in the US, we got a Canadian ETF as well, but I don't have the ticker in front of me. We can go to the S&P 500 TSX, where we can get the same thing. If you go to tmx.com, you can see the Canadian side of ETFs. So we're only going to do the US here to show you the idea how to do it. So when you go into utilities like this ETF, you can click on it. And when you click on it, you're going to get all the information on this one here. This is starting to pick up to the upside, this index here. Right now, it pays about 2.67% interest dividend right now as an ETF. But you can find individual stocks that will pay you a lot more. Okay, so the expense ratio is also very low. It tells you right there 0.08 on this ETF. If you go buy some mutual funds that are covering utilities, you're going to be paying roughly around 2 to maybe 5% in expense ratio. Here is 0.08, very low, and it pays a quarterly as well. Total assets 21 billion, and you can see the volume is pretty good, over 9.3 million shares traded daily. Okay, so as we go down, you can see the news. This is the news on ETF, what the ETFs are doing. And what we're interested in is I'm interested in going to individual companies. Okay, you can also see the return by the months. Okay, what's the best month for return, getting your return on your ETFs? So July, these are months are usually some of the best months that gives you the best returns. Okay, so far let's take a look at the numbers at the stocks down here. Here we got your top 10 holdings in there. Okay, these are, you got your electric company there, you got your energy companies there, you got a whole bunch of different here companies here. The largest holding that this utility have is Nextra Energy. Okay, so how do you want to find a stock? Let's click on this stock and see what the dividend is like. What does it pay? So this one here has a dividend around 3.16. It has good earnings, it has a price to earnings ratio, right? Dividend is good. Market cap is huge, $147 billion company. So it's not gonna go out of bankrupt anytime soon. And not only that, if you look at the chart has been pretty much flat. Okay, for the last 3 years, utility stocks have not gone anywhere. And now we gotta see, is this stock going higher? Are we gonna be able to say we can, other utilities go up? Can we benefit from this stock? One way of benefiting from this stock right now is the dividend. And another way of benefiting out of this stock is huge. It's not gonna go bankrupt. And it's gonna pretty consistently keep paying you that dividend. Okay? So let's take a look at the numbers on this company. So basically there's a news here. Basically analysts have a buy on this one, except this one here has a hold on it. But you want to look at the latest ones. This one came out in 28, 27, 26, 26. So these just came out in the last, within the last month. And this came out within the last month as well. But most of them are buys. This is what we want to see. We want to see a lot of people buying this stuff. Okay. So as we look at we can start look at the numbers on here, and you can see also analyst buys. And exactly, this is what I want to see next, what this company does. It's a subsidy generate, transmit, distribute, and sell electric power. Okay, so it's a utility and it's under the sector utilities. What the revenue looks like, forward revenue is growing, and that's telling me positive numbers for the future for this stock. If I buy it today, will it go up in the future? So when you see revenue, that's estimated revenue going to the upside from the current revenue, that's a forward looking revenue. And when you have a forward looking stock that's increasing in value, especially in revenue, chances are it's going to continue to go up onto the other side. Same thing with earnings. Earnings are pretty consistent, okay, even though these two are telling us a little bit lower earnings, but I do think they're going to pick it up with these revenues. Okay, they're always, especially utilities, they're always when they're doing their estimate, they always do a lower estimate on these companies. Okay, so there's your earnings right there, year over year. They've been beating in. This is the future looks like. In 2025, they're gonna have 15% in earnings. This company, 2026, is gonna earn about 10, 11%, and 2020, it's gonna be about 10%. So this is a pretty good growth in the next 3 years. You're looking at a company that's going to go 35%. And chances are, when a company grows this like year over year, like 35%, not year over year, next 3 years, chances are you're going to get about a 20% increase in your dividends. Okay. As this company grows, they also use the forecast in their revenue as to increase their dividends. So you're going to get a 20% growth. That's what you want to see. A company growing in revenue, a company that's going to grow its dividend, and you can see that revenue is up. So I would buy this company in a heartbeat and hold it in my utility thing. Okay. So what else can we see here? Let's take a look at the valuation. Forward-looking price to earnings ratio, which is about 20. Okay. Right now, in the trailing 12 months, it's 25. This forward-looking price to earnings ratio is actually lower, which is a good sign. Okay, so that is a good sign. Gross profit margins are positive. Return on equity is about 8%. I would like this number a little higher, but return on assets about 3%, right? But again, return on equity is the number that I like to see higher. Return on assets, really, what that number is basically includes very simply is if you take all their assets right now, they're just getting a 3% gain on them. But that's not what I'm looking for. I'm looking for the cash they have. I'm looking for the other products they have. What are they getting a return on that? Okay, market cap 147 billion. Total debt about 93 billion, cash on hand 1.73 billion. Remember, the debt is paid as the income is coming in. Okay, roughly this capital structure of this company is about 249 billion. That's huge. Okay, dividend there, annual payout is 227. Payout ratio, you don't want this more than 100. This is good. 50. Usually for utilities, anything up to 90, anything up to 90% is good. Excuse me. Anything up to 90% is good. Okay. Anything over 100 is then they're borrowing money. Okay. Then they're borrowing cash to pay out the dividend. So you always want something that is below 100%. Okay. And if this is like 10-20%, that's even better. That means they can increase their dividend very easily. Okay, so they're paying very low. That's pretty much it. You can see also the ex-dividend dates. That's the date that you must, if you're holding, you must have it on the previous day, right? On the ex-dividend date, which is on the 28th, you can sell it if you want. And the payout ratio, not payout date, is September 15th. So if you're on record on the 27th and on the 28th, you can sell it, but you will get that dividend on the 15th, and that's when the payout date is. So payout date is always different than the the recorded date. Why is it different? Like a lot of people don't realize why this date is different from this date. The reason is they need to see who were holding it by this date. They need the record of that. And then they sort that out and they pay it out on the 15th of September. And the frequency, quarterly. Okay, that's the dividend they're paying out. So this company is not bad. Look at all the numbers, looking at the forward-looking numbers, looking at the ratios, and looking at this here. And then you can also go to FinViz double check it if you want, because I wanted to show you the same stuff in FinViz. So what was the ticker on that one? NEE. So you can come in here. Another thing you can do is also look at whether the insider's been buying or selling on this stock. Okay. So that's what the chart looks like, right? Pretty consistent, going sideways. And we expect this to start going up with the interest rates going down. We expect this stock to go upwards, okay? So you can see the same numbers that are here. You can see the book value. Then the one number that I didn't show you guys there, debt to equity, you can see it in here. And where is debt to equity? Because we looked at that 93 billion market cap, the debt level. I want to make sure its debt is not over 1. Okay, anybody see where is it? Where is debt to equity? It's here somewhere. You can also see the insider ownership in here. Okay, why am I not finding? Here it is, debt to equity right there. It's a little high. It's actually a lot high, 1.83. You saw the 93 billion, right? A lot of people would get scared of that. But this company does make a lot of money. But if you don't like this debt to equity number, you can always go find another company, right? Yeah, that would little bit worry me about this debt to equity ratio here, 1.83. I like that below 1. Okay. I like that below 1. So let's go back here, see if we can find another company that that will give us a good, even a better signal than the one that we had just had. So let's go back here. Okay, that is XLU. Let's go back here. Oh yeah, that's where we wanted to go at. Actually, right there, and go down here, see what the next company is. Southern Company. Anybody want to pick out one here that they like? Let's go with the Electric Power one here. American Electric Power. Let's see. This chart is pretty good. It pays a pretty good dividend, 3.40. Market cap 58 billion. Remember, utility companies usually have a pretty good market cap. They're pretty solid companies. They have a very high this year. Okay, price to earning ratio is okay, around 18. Okay, and you can see from analysts there were buys, and this guy is on hold here. And you can read on, and these stocks have not done much in the last 3 years. Remember, look, basically if you look at the some of these charts are basically flat, and now it's starting to go up a little bit here. This is on the kind of breaking out to the upside. So I like this chart. And let's take a look at the numbers on this stock here. Okay, but there's your revenue. Forward-looking revenue is growing. Okay, that's what you want to see. That is good. Earnings, I'm not worried about that much. And what has it done in the past? We're looking at about 8% growth in 2025, 4% and roughly 4 or 5% in the next one. These numbers are not as good as the other company had. Maybe that's why they have so much debt. They can afford it with that growth. But when you look at these one, this is only growing about 16, 17%. Still not bad. It's a utility. It's not your growth stock. Remember, it's not your growth stock that is here. So looking at the price to earnings ratio, forward looking, 18. Presently, trailing 12 months is actually better. So this number is a little bit high going forward, but this number is right now is pretty good. Okay, so hopefully they will improve that number and going forward. Profitability not as good as the other one. That's why maybe they can afford all that debt. These numbers are not as good, right? But still positive. That's what you want to see, still positive. And it's got half of the debt. The other one has like $93 billion debt. This one has 46 billion, but also the market cap is a lot smaller. The market cap on the other one was like 140, 150 billion. Okay, you can see the difference. So between that company and this company, and cash is only about 439 million, right? Okay, volume traded daily 2.18 average, which is fine, but dividend here is about 3.4, and payout ratio is about the same as the other one. Okay, 60%. 5-year growth. To be honest with you, by looking at this number and looking at the other company's number, I still like the other company. Much bigger, right? And let's take a look at the payout ratio on this one. We can go back in here. What's the ticker on this one? AEP, and we can take that into this one and take a look at it here. But I definitely like the other company better still, according to the numbers. But remember, you don't have to live with that one, right? You don't have to look even doesn't have you don't have to look at any of these companies. You can always go research another one till you're happy. Okay, I might not be happy with this one. I might not be happy with the last one, but the last one was still better. But if I'm not even happy with that one, I can go look at another one. So debt to equity on this one is pretty high too. Okay, and this company is smaller than the other one. Right, so I'm not happy with this debt to be honest with you. I'm not happy with that. I wasn't happy on the other one. I want to find a company that has a little bit less debt. Okay, that's how you keep researching. And the other thing you can do is you can go scan the sectors, screen. You can screen them, and you can say in there, say you want to find a company that has less debt. I don't know if let me take a look if I can scan by a sector in here. I can't do it in TradingView. I know that, but if let's see the screeners here, if they have by sectors, sector, fundamental, descriptive, index, exchange, IPO, shares outstanding, trade. I don't see industry. They have well, you can do banks and stuff like that. I'm looking for sector. Oh, here we go, right there. All right, so we were in utilities, so you can go and come in here and say, hey, utilities, I want to find. So you do a total number of stocks you got in here. You got roughly how many? We got about 6 rows plus. So that's a lot of companies. So how do you want to, scan out? What you want to do is, what's the payout ratio percent of good for dividend? Anything under 100, buddy. But you want to, if you have really good, you want to see 40, 50%. Those are the chances where you'll get an increase in dividend in the future. But if somebody's paying you like 80, 90%, it's not a very good chance you're not going to get an increase in the dividend very soon. But anything around 40, 50, 30 is a very good percentage. So here we are. We got the utilities here. And you can, in here, go into fundamentals. Okay? When you go into fundamentals, we want to find something less than the long-term debt to equity ratio. We want less than 1. Okay? Under 1 right there. Also the payout ratio, you can say how much you want in here too. But look how much we came to down to. We had 6 rows, we are down to 2. Okay? If you further want to go out, and you can say payout ratio, anything under 1 I'll take. Okay, let's say, and anything under 1, under 20, I want under 100%. Okay, now I got still a lot of companies. Let's say I want to go 50, less than that, under 50, let's say. So now you got this many companies. So these companies have a payout ratio of less than 50, which is good. That's what we're looking for. Okay, that's what we are looking for. So here you got pretty good companies here that you're looking for. I don't want to go anymore because I'm going to break these companies down even further. If you want to, like, you can do price to earnings ratio, stuff like that, price to sales ratio, price to book, whatever you want to do, you can do it in here. But these two numbers are pretty good for utilities. Under 50%, long-term debt to equity under 1. So let's take a look at this one. Here is a popular. I think we've been looking at this one, CEG. Okay, so this is they also tell you what kind of utility they are. Okay, this one, the first one is a regulated gas, which is like Enbridge. Enbridge is regulated, right? Then the renewable ones, right? Those are hydroelectric, right? This another gas one. This a regulated water one. Remember, I forgot to mention water. Water comes to your house is a utility, right? Utility. So what else can we find? Independent power producers, gas, anything you need at your house usually is a utility, and that's what these are. Okay, let's take a look at CEG here. What does this company look like? We know the debt to equity is under 1, right? We know that. So we'll take that CEG and let's go in here into TradingView here. So CEG looks pretty good chart, ready to break out, right? And if you look in here, earnings per share is pretty good. Price to earnings ratio is 34. It's pretty little high, but let's take a look. Yield, it doesn't pay much of a dividend here. Very small. Utility, we want to get a good dividend. Okay, we want to buy good dividend, but this may be a little bit of growth stock in the utility. Okay, this might be growth stock. This looks like a pretty day trading stock. You can trade. I love trading safe stocks, and these are safe stocks. If you want to day trade them, they're very good. Some days, like this one here, gone up $5, almost $5.50 on Friday, and then after market it went down $5.50 almost. And they move in dollars. They're pretty good for day trading. Okay, and they're safe. If they go down, I hang on to them. They really come back. Okay, don't want to buy them at the high price, but again, this is a good paying dividend. Okay, lots of buyers, right? A little bit used to be sell. Now we are getting into buying. Why? Because the interest rates are coming down. Interest rates are coming down. Utility is going to go up. So let's go down the hatch here. And the revenue is pretty flat though. Not impressed. Revenue is pretty flat. The dividend is not there. So two things already I'm voting against this one. Okay. And then take a look at the forward looking. This is a price to earnings 34.19. The present one is all the same. So not impressed. Pretty much the same. What it is today is going to be for the future. What about the future growth on this one? Okay, profitability basically 21%. Not impressed by so much of these numbers. Okay. Long-term debt is pretty good. 8.3 billion. So we can see the difference already. When we say we want debt under 1, debt is pretty good. They also have cash on hand, pretty good, 1.97 billion. So this company definitely not going bankrupt anytime soon. And the payout ratio is 16. We did under 50, right? It pays. That's the problem. It needs to raise its dividend. That 16% should be 50%. Chances of this company raising dividend is pretty good. Why? They got cash on hand. They are paying very low dividend already. So if they increase their dividend in the future, they're gonna make this company more valuable. Okay. There you can see the history of growth and dividend. They always have increased it. Okay. And down here you can compare the other companies to it. You can here you can also in Seeking Alpha you can type in what you want to, there's a place where you can compare all the other companies with them. Like peers here. Now all you do is click peers, and these one here, you can actually edit these. Okay, you can actually edit, and you can compare to each other which one have the best numbers. Okay, so going back to here, CEG, let's go back. Okay, we did sectors. Okay, this is how many companies left. Does anybody know a company in here they want to pick out? No. Okay, let's pick out another one. But we'll try to pick out the companies from the U.S. instead of going to overseas. Excuse me. Excuse me. Sorry. Oh, sorry about that. You guys are getting the idea how this how this works, how you can do your own research, right? So if you have any questions how I'm doing it, please let me know. CWT California Water. This is another company that I picked out from there, and you hear me now, okay? Okay. So thank you. Let's take a look at CWT. What is C? Go back here. We don't want to compare. Okay, CWT. So CWT pays about 2.5% dividend. The other thing, quickly, one of the things I want to point out for you, probably didn't point out before, is you always want to keep an eye on the short interest ratio. Short interest is how many people, what is the percentage of the total number of stocks that have been shorted. If this number is anything above 10, 20, 30%, that means this stock has been shorted a lot and they expect the stock to go lower. Okay. Also, when it gets to around 30, 40%, squeeze can happen. What is a squeeze? People can start buying this, and those people that are shorting it are going to be forced to buy, and they're going to push the stock price higher. That's called short squeeze. That happens around 30, above 20%. Usually, they short squeeze them. So this is a good number. Also, it shows you in here. This has a very small shortage because they know this pays a dividend. Just remember the other thing I want to tell you guys: when you short a stock, doesn't matter what stock is, if it pays a dividend, and you shorted the stock, and you go into this date, the ex-dividend date, and you still have shorted the stock, you know who's going to pay the dividend? You are. If you shorted the stock, it's going to come out of your account. A lot of people don't know that when they're shorting the stocks out there, is if you short a dividend stock, and that's why usually the dividend stocks are not that many shorted. Okay, stocks that pay dividend are not shorted that much. And if you do short it and you hold on to the ex-dividend date on the short, they're gonna take the money out of your account to pay the dividend. Okay, just remember that. Little tip for anybody who doesn't know. This is one that's a pretty strong buy. Okay, look at these guys, a pretty strong buy on this one. As we go down the list here, you can see the earnings, strong buy. Again, what does the company do? Their water waste utility. Okay, very easy. Revenue is pretty good. Looking forward, it's going to the upside. Okay, earnings are always there. Then here's your growth for the next. Utility companies don't usually grow that much, but this one here is very small. Okay, so the problem with this stock is if it's going very small, it might just go sideways for a while. Okay, looking at the profit margins, gross margins of 54%. That's not bad, but not very impressive on the return on equity again. Okay, going dividend yield 2.59%, payout ratio is about 50. So this company can afford to increase the dividend. They can. Okay. Long-term debt to equity very small. Market cap is only 2.76 billion. Cash on hand pretty good, 50. These companies do tend to have good cash on hand. So it doesn't look too bad. It doesn't look too bad, but I'm not impressed by the growth. Okay, I'm not impressed by the growth. Okay, so I gotta go find something that goes a little more than just 0% almost. So this is how I go through all the stocks. I will find a good stock, right? You look at you do your screening, you look at the individual stock, and now you should be able to tell. You should be able to find a good stock yourself. Okay, you should be able to go to these websites and say, "Hello, this is what I'm looking for." And believe me, once you find those good stocks like that, that's how you make money. That's now you know if a stock is going to make you money or not. If it has a lot of debt, they're going to be paying their debt off. With all the earnings that are going to come out, they're going to pay the debt off. They're not going to have anything left for you, right? These kind of companies, you want them to pay you cash. Look at the Enbridge, right? Enbridge has a huge debt as well, but the problem is they're able to manage it because they're huge on the growth side. They've been spending a lot of money on. If you look at Enbridge, they've been spending a lot of money on buying. If you look at their growth on the buying couple of pipelines, they've been spending a lot of money. So you can accept their debt to equity ratio will be high, but for the future they will be able to pay that debt off as earnings are coming in from those pipelines. So we're looking at Enbridge. This is the American price. It also trades on the Canadian. It's about 65. It's sitting at 49 here. Looks like it's getting a nice breakout now. It's winter time. Gas people going to use. It's a utility. Interest rates are going to come down. This is a benefit. This could go to $60, $70 on the US. Right? The way it's going. And let's take a look at the numbers. Yeah, per debt to equity ratio is high. But they're also making tons and tons of money. And this debt to equity ratio will go down once they pay for these pipelines out of their earnings. You want to see this debt to equity ratio go down. You want to see their debt go down. Okay. Pretty good dividend. You can probably go. The reason I just wanted to show you Enbridge is because I own it. I think many people in here own it as well. Okay, I'm still holding it. We bought at 44. I know a lot of people here bought it back at 44. They're still holding. We've been holding now this thing for a while. Okay, so let's go. You can take a look at Enbridge, how Enbridge is going, because I want to. This pretty much straightforward. Once those, the new pipelines come online, the revenue is going to jump on this one. They're not contributing to the revenue yet. They bought 4 pipelines. They're building. They're going south there into Michigan. But once they start operating, the revenue will jump on this. And people don't see that. A lot of people see just, oh, look, if they don't know anything about a company, they'll look at this here and say, hey, revenue's flat. All right. But we know why the revenue is flat. and when the new revenue gonna start coming in. When the new revenue starts coming in, this is gonna be a much higher, and they're gonna be able to pay off their debt. Okay. So right now, it's not a great growth right now, even negative 7% in 2026. Why? Because they're taking a lot of that money and they're paying for these pipelines. In 2028, 29, 30 going forward, we should be looking at 15 to 20% growth in Enbridge. Okay. Right now, still pretty good, pays a good dividend, and the stock has done very well compared to the S&P 500, right? 21% this year. It's been up compared to S&P. Okay, in 1 year. So dividend is pretty good. So far here shows a 5.5%. Okay. So you guys now know how to look at sectors and how to find stocks in sectors and why you should buy it, and you should be able to do a research very easily on this. Any questions? Anybody have any questions on this? Everybody happy? Okay. All right. So we can, if you have any stocks, we can take a look at it. And some of them ones I missed from yesterday was take a look at BBAI. What's a BBAI? So I'm gonna go. In Enbridge, sorry, in BBA, Big Bear. Is this a technology stock? It's come down. It went up here nicely with the rest, all the stocks were going up. Then it came down, then it went back up again. Now it's back down again. So the chart doesn't look too bad. I mean, it's a new stock. It's technology, I believe. Let's take a look at quickly financials. It's in the data driven, okay, data market, cloud market, whatever. That looks like a very popular side these days, and AI. Okay, it's based out of McLean, Virginia. It's a small micro cap stock. Just remember that it's very small, and this money losing, it can be very risky. Okay, revenue, it's got 160 million, pretty consistent over the years. And the market cap, like I said, 1.88 billion. What does the numbers look like? Doesn't have much, right? Earnings, negative still. Okay, dividend probably doesn't pay any, that's for sure. I'm not, it's a negative earnings. Revenue's not there. It's a micro cap stock. You got to be very careful of small companies. So right now, I don't know. They're trying to turn around here. I'm not very happy with the numbers, basically. Okay. The technology might. The other thing, the only way you want to buy this stock or hold is if you like the technology. Okay. If you like the technology, it's fine. But for anybody new, I would just stay out of the stock. I would. Take a look at some of the other ones here. Let's take a look. Yeah, yesterday and today's class is recorded, so, and I will put them up right after this here. I had to run out yesterday, finish my backyard. I did finish my backyard yesterday, and then we ended up going to a show at Woodbine Center here, Punjabi, one of those music ones. So anyways, these looking at any other stocks. Okay, so let's talk about a little bit about the market now. Where is the market going? We had the CPI, we had the PPI last week. What is the market gonna do this week? And I want you to get a little bit prepared for it. Okay, so when we're looking at ES futures here, and they're sitting at all-time high. Okay, the CPI and the PPI showed us this week we could get a 1/4 point cut. Okay, we could get a 1/4 point cut for sure. I think it's already priced in the stock market. 0.5% is not priced in. Okay, we could be surprised if we get a 0.5%. Why? Because these PPI and the CPI numbers were not very strong to the downside. They were still kind of up, right? The PPI number, the CPI number, they were not incredibly to the downside. That's why we're saying we're going to get a quarter point cut. Okay. So if we get a half a point cut, we can continue to the upside. And it's not going to be, if we get a half a point cut, it's not going to, this market is not going to get very excited. It'll be up, but it's not going to be pumping the market to the upside. I know we're going to get a quarter point, but half a point is outside chance we'll get that. But it'll be a little bit surprised by not too much. But the most important thing going to be on Wednesday is what the statement he does. What kind of statement is it? Is he going to say, we still going to have 2 more meetings after this one, right? We still got 2 more meetings. And what is he going to do in those 2 meetings? Is he going to say, yeah, we're going to continue with our quarter point cuts or half a point cuts, whatever it is? Or is he going to go back to saying, now we're back to data dependent? What is the data going to say? If he says data dependent, the market will drop. If he says we're not going to cut in the next, may not cut in the next quarter 2 meetings, market's going to drop. If he is, saying, yeah, we're going to cut interest rates, possibility of the next 2 quarters because the jobs are dying, then we are going to get a jump in the market. So that statement is very important to what he says. And what do I think he's going to say? Obviously, everybody has an opinion, and I have an opinion as well. Okay? My opinion is going to be, we're going to get a quarter point cut. Surprise if it's half. And what he's going to say is we're going to get another quarter point cut in the next meeting. And if he says the next quarter point cut, we are going to go to the upside in the market. So my expectation is on Wednesday that he's going to cut a quarter point, and then he's going to say he'll cut a quarter point in the next meetings. And if he does that, market goes to the upside. Markets will stay happy. Market will have nothing negative except remember the Supreme Court decision. If they kill Donald Trump's tariffs, and they're going to have to print $1 trillion, and if they do that, that's going to be pretty bad. Okay, that's going to be pretty bad for the treasuries. The market will drop on that. Okay, the market will drop on that. And if the Supreme Court goes along with Donald Trump, market maybe get happier on that, may continue to the upside. Okay, so that's my opinion on for Wednesday what's going to happen. We also got Bank of Canada rate decision in the morning at 9:45. I think they're going to cut a quarter point at least. With all that bad jobs report, and they know the U.S. is cutting, I think we're going to get a quarter point cut. Anybody else got opinion on what's going to happen on the U.S. and Canadian side rate cuts on next Wednesday? We'd love to hear it. Just put it in the print or type it out. And let's see how many people go in the right direction. Okay. So I think that's what exactly going to happen on next Wednesday. Okay. So be prepared what's going to happen. If you have an opinion like I do, I think I would stay in the market. And I'm worried about the market with the Supreme Court decision. So I'm on one side I'm worried about the Supreme Court. The other side I'm happy about the rate cuts. It's going to take the market further to the upside. Okay. So that's my opinion for next Wednesday, what's going to happen. Okay. So I'd love to hear anybody have what they're going to say, what their opinion is. Okay. So the next thing I want to go over is the algo quickly from, okay, I'm going to bring that forward here. Again, this is the new algo where it's used for scalping. Okay. And where do you go in? Where do you go out? Very simple. Here's the long right there. Boom. if you get a signal like that to the upside, you boom, go. And as soon as you go above this resistance line, and it opens on the price is closed above, and then opens on this one, we go long. Same thing here, price broke below. We also got a short signal, we go short. These are for scalping only. We scalp these ones. And this, I made an algo out of this. You can actually use it for automation. Okay, you can use it actually for automation. And what is the return on this thing? It's an 83% winner. It's made 79,000 since July 13th. Okay, if you had just left it as an automation trading here. Okay. Yeah, that's exactly BPS. That's exactly what I was saying. Is that statement that he's gonna put out? Remember, it's a rate cut decision at 2 o'clock that comes out, and plus a statement. And that statement is read also before the media when he starts taking questions. And what kind of questions the media asks and what kind of answers he gives, also going to move the market. Okay. That will move the market. So you can use this for scalping. This is scalping only, guys. When it breaks below, here's a pretty good breakout. I don't like to trade this from 11 to 3. Okay. I like to stay out of these times. Okay, I like to stay out of these times here. Okay, so this is pretty good. I mean, it's a pretty good algo, and I used it last week. Here, this long term. This is what about in 1 year? What's the return in 1 year? 365 days. About $687,000, and you're not looking for 687. So let's say you only got half of it. Okay. And it's pretty good on the drawdown as well. Very small drawdown. Okay. Very small drawdown. If both Canada and US cut, I believe the Canadian dollar might slightly get weaker. Okay, they both cut. But the long-term view is the Americans are going to be cutting more, and that may make the Canadian dollar a little bit stronger. Okay. But the view will be short-term cut on the drop on the Canadian dollar. It's not going to do much back and forth. So it's better for the Americans to cut, because if they kind of get the economy going, it will also help the Canadian economy as well. Okay. So I think it's good for both economies, this interest rate cut, both in the US side and Canada side. Those stocks like Rocket, the home stocks, they should be going up this week. So if you look at the DHI and PHM, those stocks still should pump up to the upside. So before I go on there, I just want to finish off with the algo here. How to hook it up. Very easy. I went through it before, but I'm going to do it quickly again. You got to go in here, alerts, right? You got to set it up. You have your algo here. All you do, got to select it in here. And same thing here, click it. And then you go into the message here. Okay. The message from here goes from your software. Whatever middle software you're using, the message goes in here. Okay. And the other requirement is, if you want to hook up your algo to your account, like a trading account, whether it's a IBKR, whether it's a prop fund, you need real-time quotes, both in Interactive Broker and your Trading View. You need real-time quotes in both of them. Okay. This one here, when you got real-time quotes, because if you don't have real-time quotes in either one of them, when the data is sent over, it won't match, and it will give you an error. So you can use webhook from here to hook up. If you have a middle software, there's a traderspost.io, you can go there. Or there's a software I have. It has a licensing fee of $100. That's it. Once you pay that $100, that it's yours, for your use. Okay, that's what the guy charges. But if you go to traderspost.io, they charge $70 a month, and you can hook up your prop funds. And yesterday I showed you a software where you can actually connect your prop funds and real-time quotes for free. Okay, you can do that, but I'm looking still into it. It's called the Blaze, I think it was. Tick Blaze, Tick Blaze. Okay, take a look at it. You guys take a look at that software too. I just learned about that software on Friday at the Money Show. Okay, Tick Blaze is the software. Okay, I can quickly show you the platform and those that haven't seen it yesterday. Okay, no, where did it go? Okay, before I go there, let's go through these steps quickly. Alert, you set up your, I'll go here, put your message in here, and that message will be from Traders Post or your software that you use. The software that I use is it's called Electro Bridge. Okay, let me bring that up. So I'll show you. So this is the software that I use. I'm just gonna log in. This one they charge a licensing fee of $100, and once you have that, you have it forever. You don't have to pay anymore. But the other one, but the only problem with this one is it only hooks to Interactive Brokers. It doesn't work with any other software. Okay, this is a message in here that you need. Place. This is a message. You copy this message and you set it up in that webhook. Let me bring that. So that's a message you copy in your webhook in here. In here, you copy and paste it in here, and then you just create. But you need real-time quotes in TradingView. You need real-time quotes in your Interactive Broker, and if you're hooking your prop funds, they also need real-time quotes. Okay, very easy. It's not that difficult to do. I know a lot of people think it's hard to do, but if you got even one little mistake in here or in your software, it will not work. You need to make sure everything is working. And when this thing is giving you errors, it's a self-explanatory. If you got errors in here, they'll tell you why you got errors. Mine's working here fine, but if you're getting errors in here, they will tell you right here what kind of error you got. Either you don't have real-time quotes in TradingView, or you don't have real-time quotes in Interactive Brokers. Okay, the data will not match. If the data doesn't match, you'll get an error. Okay, and if you punch any of these things wrong in here, futures market, if I'm trading futures and you put stocks in here, it won't work. So you gotta make sure everything is set up properly for each individual asset. Otherwise, it won't work. Okay. Any questions on this thing here, Algo? How to work it? Or any other questions? Best time to ask, guys. But I like this new algo. I used it myself. I think I'll be using it for scalping, doing the market hours from 2 a.m. to 11 a.m. this week in real account. There were a couple of issues. I think I got them worked out. So I am going to replace the one that I have in there today. I'm going to delete that one later on, and I'm going to replace it with a new one. And once I do that, I'll make sure I'll let you know. And I'll take your user ID and password. Sorry, not your user ID for the TradingView. I will add it. I will add it to the new one. Okay. So tonight before midnight, everything will be switched over. Okay, I'm gonna delete the other one and put the new one in. I did work out some of the issues. Remember the issues that I showed you guys, right? Like there were two of them in here. So I got that issue solved, and I will replace that with it today. Okay. All right. You mean in your invite link, right? So AJ, just send me your user ID for your for your trading view. That's all I need, and I'll make sure you're added today. I'll make sure you're in there. Okay. Anybody else who doesn't have the new it will be called. Let me see. It's not this one. This is what it's called. This one. No. No. Okay, it's not that one. It's this, but it's probably this one here. This one, does it have one? I'm just looking for two. I think it's probably this one. Yeah, I think it's this one right there. Yep, I think it's this one. Yeah. Okay. So one thing I want to tell you guys, when this takes up when it breaks above here, this trade here, one thing I want you guys to remember, always remember I showed you, look at the left hand side. Look at this highest level, this resistance level. If it's close by, if you get a buy signal here, wait for the price to go above this. Let the price go above it, then take the trade. Okay? This one, a lot of times these are false breakout. This thing will protect you from those false breakouts. So when you get a false breakout like that, try to take the trade above here, right? Always look to your left-hand side. Even this one here, look to your left-hand side how close it is. Because if you're only going to get the price to go to up to here, and then it may turn back to the downside. Look, that's exactly what happened here. If you scalped a little bit here, that's fine. You very quickly, but a lot of people don't have that time. Always look to the left side. How far is my scalping opportunity? Okay, always pay attention to that. Okay. Yeah, this is the one that I will be loading up today. And I'll make sure everybody's, you can use the 3 minutes or the 5 minutes. It's up to you what you want to use. Works very good on both of them. And this is the one I showed you. Yeah, this is the one I showed you. Yeah, 86% by the way, guys, in 1 year. Okay, and the settings are these here. Okay, right there. These are the setting 22 and 2, and unclick everything else. Unclick it. That's it. There's nothing to be changed here. Okay, just 22 and 2. Just remember that. I will take a picture of this. I will put it in the chat so you guys will know. Okay. All right. Any other questions? Thank you, AJ. Try to. No, I know a lot of people can't do anything with that username, but try to keep this information private, guys. Send it send me a DM directly. So protect don't try to share your information because everybody sees that, right? But if you DM me, that way your information is private. Or you can send it to me on WhatsApp. Again, watch those scammers, guys. There's a lot of scammers on the Discord. Don't send them your money, okay? They're rip-off artists. They'll use our IDs to ask for money that we manage it. We do not manage anybody's money. Okay? So please do not send us any money. You're not sending us money. You're sending it to the scammers. And once you send it, you won't get it back. Okay? So please do not do that. All right. So any other questions? I'm here to answer. I know today's. I'm kind of dead from my voice last night. I was screaming there, talking a lot, so my voice is really kind of is not kind of fresh here. Listening to them, we were singing there with the music last night, going crazy anyway. But I enjoyed it. But it's in your when you what you'll see is when you go into your trading view, you go to indicators here, and when you go to indicators, this thing called an invite link. Okay, anything that's sent from me that will be in here. So go into your invite link. Okay, and you'll find them. You'll find it there. If you don't find it there, then send me a message. Okay. TTM. There we can look at those stocks. Okay. Excuse me. New York Stock Exchange. Okay. Let's go to the daily chart. Day chart. Look, nice recovery. I like the beautiful trend line I can draw on this one here. This is beautiful. This is pretty good. This is nice. Touch here, 1, 2, almost 3, almost 4, 5, 6. This is a strong trend line to the upside. So what I would want to do, first of all, technically, this looks good. If I want to be out of this one, if it hits below this here, or I may want to short if it goes below this trend line. Couple of things you can do. And if it stays above the trend line, you usually want to go long and stay long. Okay, that's pretty good chart technically. What does the fundamentals look like? Fundamentals, are they going to push it higher? Okay, Titan America is a manufacturer and supplier of heavy building materials and service operating primarily in the, okay, they're into building, okay, infrastructure. Florida, okay, they're down in Florida as well. So $2.90 billion company pays no dividend, basically. Take a look at the statistics. No numbers here because it's a new stock. What about revenue? Okay, revenue is going to the upside, yes. Revenue is going. So when there's a new stock like that, the only thing I can compare it to is revenue. So it's got good revenue, and earnings are looking positive as well. So stock is good, fundamentally is good, and technically the stock is good. I think this stock could continue to the upside. It could easily. So it looks good to me. If you have it, hang on to it. If you're going to want to buy it, make sure it stays above the trend line, right? So I think it can go higher. It's pretty good. Very nice stock. WRD. Technically, it looks pretty bad. Stock has now been actually holding steady here around 847 above. All right, if it can hold, this would be my stop right there, around 8450. Okay, but stock has been going sideways. It's a new stock. It's below its IPO price right now. Let's take a look at what this stock does, see if it can make a comeback. So what does WeRide? It's look like a driving technology. Okay, deployment. Okay, it's into one of those Tesla type of cars. Application, autonomous beacon, self-driving cars, that's what it is. Okay, 2.80 billion. Remember, the competition is heavy in this, right? So competition is very heavy. Revenue, not much. Earnings, I don't see much. Statistics, I don't see much. I don't know. There's too much competition in this field, and this is going sideways. So I'm not happy with it technically. I'm not happy with fundamentally. So would like to just stay out of the stock. Okay. Fortis is a utility company. It's pretty good actually. Um, Fortis. It's on TSX too. I think it is right there. I think this is probably what you mean. FTS. Okay. Lovepreet. Okay. So this is a utility company, as in Canada. It's a pretty good company. You can hold if you want to buy it. Hold on for long term. Okay. It looks pretty good, but you can also draw a trend line from here. It's only 2 points of touches, but again, I think it can continue to the upside. What do the numbers are usually pretty good on this company? Fundamental numbers. 20, they all look good. Fundamentally, the numbers look good. Revenue is pretty consistent, 9 to 12 billion, right? Market cap 34 billion. That's pretty good. It also pays a good dividend as well, 3.60. So this is a utility company. That's what we talked about this morning. Yeah, you can buy this one as well. And look like it's maybe turning around back to the upside. Okay, it's a very good company. APLD, I think this is the one we've been digital. It's breaking out. Technically, chart looks very strong to the upside. Can it continue to the upside? Yes, but take a look at the resistance level somewhere here. 20 bucks. So 18, you got about $2 more to run. And APLD is pretty good. We talked about it during the week. Okay. Again, what does it do? It's engaged in the production or development of data centers. Like everybody's into data center these days. So are these. But the $4.89 billion company is a lot smaller. Money losing company. Chart is, I bought it on technicals. And if you bought it on technicals, you got to keep your stops tight. Okay. Dividend doesn't pay any. Statistics, they're not very good because I like to see revenue growth. The technology is good on this company. I read the technology, but we need to start growing the revenue as well. Okay, once you start revenue, then it'll be fine. But it's an expensive one right now, 4.89 billion. But if you have on the technical basis, it can run higher. Technically, it can run higher. But fundamentally, we need to catch up with some of these numbers. Okay. So if you're a buyer, keep your stops tight. If you have it, keep your stops tight. Okay. MTG. Chart looks beautiful. I love when charts look beautiful. Just straight up. It's ready to break out. It's already breaking out 28.40. Can it keep going? Let's take a look at the numbers. So what does they do? They're into investment holding company in the province of mortgage. Okay, there it is, mortgage. I like it. This is where they're going to grow. Interest rates are coming down. And where is this going to go? It's going to go higher. That looks pretty good. $6.5 billion company, pays a good dividend. Price, look at these numbers. They look already impressive. Okay. Numbers look pretty good. They're ready to grow. Revenue, I bet this number is going to go up. And let's go into earnings. And the forward-looking numbers are higher. And very good positive earnings. And they're going higher as well. So I like it. You can, which one would be better? Would the Rocket Mortgage Company would be better or this one? You can also compare the two, right? When you're looking at these statistic numbers, right? These are excellent numbers. Price to earnings ratio is 10. So what does the Rocket look like? Rocket looks like chart looks good. It's ready to break out the new highs, right? I give it a $25 target when it started breaking out above here. I think it can still get to 25 by Wednesday. Why? Mortgages are going to drop. And they're already dropping because they're already talking about interest rate cuts. So what do the numbers look like on this one? Statistics. Doesn't have a price to earnings. Price to sales ratios looks pretty good. Book value is under book. Okay, why don't we have price to earnings ratio? Let's take a look. You go into earnings. You take these last quarter, 4 quarters, and add them up and divide that into the price. You'll get your price to earnings ratio, right? But I want to look at the forward number. The forward number is growing so slowly. And I think when more and more people start getting mortgages, these numbers will start getting stronger. But these numbers are right now weak. But I'm looking more for a growth on this stock, especially revenue. I want to see this revenue grow. It's going over from last year, around 5. They almost doubled it. I'm looking to double for the next 3 years on this. And if they do, this stock will be a lot more valuable. Okay. So I definitely like this stock. But which one is better? I think they're both good right now. I think they're both good. Okay. Any other ones? Anybody else have a question? All right. Any questions, guys? I'm open for discussion right now. We can stick around for discussion. I am going to be here. I'm going to stop recording this session, while I'm sitting here, I'm going to start uploading it. But I'm going to be here for a while. I'm not going anywhere. If you have a question or a stock, you want to put it in the chat, I will take a look at it. Or if you want to talk about anything, you want to talk about the algo again, you want to talk about any particular question, just open your mic and ask. Or if you can't open your mic, let me know in the chat. I will open it for you. I know there's a lot of reds here, mics, because sometimes what happens is when your mic gets open, then everybody else has. Electro Bridge is for Windows only, Akshdeep. It's only for Windows only. Sorry about that. Anybody? Just I'm here, guys. I'm not going anywhere. Short term, if I find a good stock, I will definitely buy it. Right now, it's very tough to find good stocks because the market is sitting at highs. So that's why I'm hoping for a market crash to the downside. I have a whole bunch of basket of stocks where I like to buy, but they are all very expensive right now, and that's one of the reasons I'm not going in there and buying anything. And plus, I'm a little bit worried. I will also want the Supreme Court decision to come down. Okay.